Hello and good afternoon, YouTube. Thanks for joining us as ever. It is the 2nd of August, like Tuesday, normally a day where the markets really start getting into the swing of things. And without too much news, well, without too much data, should I say, in the mid-morning session, we've had plenty of volatility, and we'll go on to talk a little bit more about that in a second. So, yeah, just bringing you up to speed with the big news of the day. All the talk at the moment is about Nancy Pelosi, the US Speaker, and she is flying to Taiwan today. Let's give you a little link into the route she's taking. Just a little image for you here. Not the direct route to Taiwan from Malaysia, but she's flying around Philippines just to try and attack it from the furthest side from the Chinese border. This area, this median line area between Taiwan and China has been seen some military action from the Chinese. They've been flying a few military jets around that region. So safely does it for Nancy as she's set to arrive, we believe, in about an hour's time, touch base, hopefully on dry land, as she arrives in Taiwan. Why is this important? Why is Taiwan important? Well, as I mentioned this morning on the YouTube, on the Zoom call for all our clients, Taiwan is one of the biggest semiconductor producers, so we're looking at a business that, or a market that is crucial for tech. So obviously the tech market has been underpinning the US growth really for the last 10, 15 years. And if you're Tesla or Apple and you want to produce tech-based products, you need these chips, and these are made predominantly, well, the biggest manufacturer in the world is the TSMC in Taiwan. So it seems wise to stop China getting a hold of that region to make sure you can keep your supply chains going. Because as we've seen from China recently, supply chains have been a significant issue. That is something the US would like to avoid, and perhaps she's there to kind of flex a little bit. This hasn't been received well, as you would imagine, from China. They themselves have been talking about potential countermeasures, including military action. And they said there would be serious consequences if Pelosi did indeed go towards Taiwan. And this is why I've got the gold chart up in front of me now. Interestingly, we've seen a little bit of selling in the last few minutes on gold. But initially, well, all day really, we had the initial kind of spike in the early part. We had obviously some other news today was the Al Qaeda, was it Zawahiri, if my pronunciation is correct, was killed by a US drone strike. Saw a little bit of a rally here, and gold as well after the COMEX open. Those of you who aren't aware, you can tell really when the volumes kick in these markets. The COMEX is the exchange where the US futures trade up for the gold market and silver markets in the US, and that opens at 1:20 UK time. And it's quite clear there was buying straight off the bat out of the COMEX open, rallying it from 778 up $10 in about 15 minutes. Interestingly, we've just gone and given that right up here. Anyone who perhaps had stops around here, might be a nice little liquidity grab. We've seen a lot of liquidity grabs from the markets in recent days and weeks, given that it's a lower volume time of year. As I always say, in the summer, you want to really be conscious of those stop runs, because if you're a big player and you want to say in this case, if you want to get long in gold and you want to get long in size, then it's going to be easy to buy into all the selling that occurs around this level. And that's why the markets tend to kind of run through key levels where retail traders would have stops. Get all that volume out on the sell side, you can buy into all those sells, and lo and behold, you've got a hell of a position at a pretty wonderful price with a clean market. The other side of this, of course, is that anyone who's trying to trade like breakouts, they also get stitched up too, because if you're say you were kind of waiting for a breakout of this high, if you got a little stop run on here, you're long, and then the market turns, that can also be painful. So they're taking the liquidity on both the kind of sells and the new buys with this as well. So just be conscious that is a feature of the market at the moment. As we look through the rest of the day, there's not a huge raft of data out today, as we've had in recent weeks at least. We've got the jobs data out at 3 p.m. this afternoon. JOLTS obviously giving you a little bit of a heads up of what we might see later in the week, and as we approach the US non-farm payrolls on Friday, as always. So that's it really in terms of data. I wouldn't be too keen looking at the data particularly today. I think that the real money will be made following the news, listening to your squawk, or if you don't have one, just using your TweetDeck and making sure you're following the right people on there. TweetDeck's a really valuable tool for traders. You can get news very quickly when you see spikes in markets and see high volume come through. You can often see a news article posted by some of the news members on there to pump it out. In terms of the Squawk, we obviously like the guys at Live Squawk. If you haven't already done a free trial with them, they offer a 2-week free trial for traders. Given there's not, these summer months are tricky, and given these tensions in between US and China look like they're just starting, this might be a really good time to use that free content and get some practice on how the Squawk works, see if it can help you with the trades that you take. So Live Squawk are the guys who offer a free 2-week trial. So yeah, as I say, it might be a really interesting time for traders to have a look at that. What else we had today? We had the first ship leaving the Ukraine. The first grain shipment has left the port in Ukraine, as per the agreement between Ukraine and Russia that was signed in Turkey a couple of weeks ago. The UK housing market, as we see, well, still up. I think it's like 11% year on year, but still off slightly from their forecast. So we are starting to see these interest rate increases, a bit of demand destruction come in, and slightly less than forecasted, albeit we're still getting decent growth. And with them changing the rules slightly on how well funded you have to be in order to purchase a house in the first place, maybe there will be another way for the upside in this unbelievable bull market that is the property market in this country. Liz Truss has got the backing of Penny Mordaunt, and that is a dent to Rishi. He's, as I mentioned earlier, this is not looking good for Rishi. He's a 6-1 outsider now for a 2-horse race, very much looking like Liz Truss is coming in, and she's you could argue whether this is sensible or not, but she's coming in on a mandate of cutting taxes. And when we're in a situation of monetary tightening, doing some fiscal stimulus may not be the most sensible thing to do, but hey, she's a politician. That's what they're in the business of doing, right? Other news for the day we've got, in terms of news, I'd say I think really following what Pelosi says and what happens around China with her. But we also have 3 Fed members. So last week we obviously had, prior to the Fed announcement, the FOMC, a blackout from Fed members. So this is the first time you've heard from a couple of them. We have Evans out at 3, Mester out at 6 p.m. UK, and if you're still awake at 12 tonight, the big boy Bullard is on the wire. I, for one, will not be around for that. I was up for the Aussie statement this morning, and if you guys aren't trading these yet, these can be really, really good markets to trade. The kind of overnights in either China, Japan, Australia, New Zealand, you can sometimes get some very, very clean moves. They seem to be a little bit less algoed than a lot of the other markets, so you tend to get better fills and better moves in these prices, in my humble opinion. If you take a look at let's have a look at the Aussie dollar today, for example. So this is when we had the rate announcement at 5:30 this morning, albeit it was a hike, but it was a hike that was forecast. We were up to 1.85% from 1.35, a 50 basis point increase. And this, albeit higher rates tend to be good for a currency, this was coupled, as the Fed was last week, with dovish undertones in the statement, saying that they're getting towards the top end of the rate hike soon, and they see inflation easing into next year. So that's why we saw this sell-off in the Aussie dollar, and there weren't too many bad places to get short it in the first 20 minutes, or similarly for the next hour or so. You had some really good opportunities to trade on this. I did well to the momentum indicators a couple of times too. So yeah, very, very good market to trade if you can set an alarm early doors to get to your workstation. So yeah, decent moves out of the RBA. And given that I was up for this morning, I won't be up for Bullard at 11:45 tonight. Saving myself for the CPIs in Swiss tomorrow morning. So let me bring you through to the charts for the day. Let's have a look at the Nasdaq and the S&Ps on the left here. We've got the Nasdaq to the left of center. A little bit of chop around today. And the European markets, by contrast, have actually been quite aggressively bullish in the last couple of hours. The DAX especially has had a really good run to the upside. This hasn't been coupled with what we've seen in the US markets, albeit the Dow has started to have a little go since 2 o'clock. But yeah, the Nasdaq is still obviously struggling a little bit. Is it a surprise that the market that's most impacted by chip makers is the weaker of the 3? Probably not. You'd expect that the Nasdaq would probably be more vulnerable to the issues that are going on in Taiwan than the S&P or certainly the Dow. where there are a lot less of those components making up that size. So we're open and we're off. Initial buying in the Nasdaq, a little bit of weakness on the Dow so far. Yeah, around, it'd be very interesting to see what happens with the bond yields as well, because they've started to nudge up as well. Been in quite a narrow range all day. And yes, since what, 2:15, since I've come on with you, I've had a little pop in the yields. Is there some risk of sentiment coming into the market, given the geopolitical tensions? We shall see. What else do we have for you today? Yeah, talking about the gold market. As I say, if you're familiar with gold, for example, you will heard that we obviously get the open here at 120. We've had a few people talking about the oil market as well today. That volume spike kicks in at 2 o'clock, and that's when the NYMEX crude market opens. And this is when you get some excess volatility coming through. So if you like trading opens, you might want to add to your repertoire the gold market at 120. And certainly in the last couple of weeks, the oil market very much in vogue. And after 2 o'clock, that's when you tend to get excess volume come through, and hence that extra volatility that comes with that. So yeah, do set your alarms if you need to. But yeah, we've had that sort of liquidity grab on gold up here, just given up the COMEX lows and then turned on a dime as the volume comes in. This is something we see quite a lot of at the moment. Similar on the oil market, really, before we kind of took out those pre-open lows. For anyone who's long with stops below here, they've got taken out, and now we're up towards the highs here. So this is, as I say, something that you see quite a little bit in markets at the moment. Back to the US, Nasdaq really out of the gate here. Yeah, we're up a nice 50 ticks in the first 2 minutes or so. Wall Street, on the other hand, is the one on the back foot, and they do tend to come into line on some stage in the day, but this is the nature of market on open orders. If you have orders to buy in your tech stocks and you have orders to sell on your Dow, then you're going to see a discrepancy and a divergence between those prices in the early kind of first 5 minutes or so. Well, 2-3 minutes normally it's kind of done, and then you can get on with the trading for the day. So I certainly don't trade the opens in the way that I used to, just straight out of the bat. I tend to wait for a little bit more confirmation on my trends and to avoid any significant volatility that you're getting here. Even just looking at the ticks on here on the Nasdaq, I just saw like a 10-20 tick move in one flash. I mean, to trade market orders as well around this time, it can be very difficult. If you are trading on the opens and you have specific targets in mind, I would always use limits or always use orders to try and get into positions, whether it's stop orders to buy momentum or limit orders to short up prices or go long at lower levels. Excuse me, that tends to be a safer way of trading, because you can easily click the button and you'll fill 10 ticks or more on the Dow sometimes outside of the price you're looking for. So always be careful with that if you can be. For those of you who did sign up last week and joined us for the FOMC Zoom, thank you very much for doing so. It was a hoot by all accounts. I wasn't here for it, but there was some fun had in the office, some nice easy trading on the soft words from the silver-tongued Jerome Powell, which made things very easy for those on there. So if you do and you haven't already signed up, then this is a really good opportunity to do so, because there'll be plenty more of this content out for members each day. We do Zooms right before the European Open and again at this time for the US Open. So it just gives you guys an opportunity to understand what we're looking at and what's likely to move markets going forward, and hopefully give you a little edge in the market. And it's all about those marginal gains in trading. If you can get those, then you should be able to turn a not unprofitable trader into a break-even trader, and a break-even trader into a profitable one. That's the aim of the game, to get those little edges. The links to do so, to join up with us, are below. They're in the description below this video. So as we approach the end of these first 5 minutes of trade, with a little bit of divergence, strong up on the NAS, strong down on the Dow, pretty much unchanged on the S&Ps. Not a lot to take away from that at the moment. There will be a resolution, I'm sure, in one direction or another. I, for one, will probably be only trading after we get some volatility and news from the Taiwan issue. So trade carefully out there. Join the live squawk if you haven't already done so for that free trial. Sign up with us for more content every day. Other than that, we'll see you back with, well, Jerry will see